Hey guys, welcome to The Financial Twins. I'm Mark. And I'm James. And today we're going to be looking into what makes houses increase and decrease in value. Even if you are not watching the housing market, I'm sure you know that the housing market has been going crazy. Prices have gone up an incredible amount in the past year. Historically, houses tend to go roughly somewhere between 3 and 5% appreciation per year. In the past year, it has gone up an average of 13%, and that's just the average. Our city has been in the top 10 highest appreciating housing market in all counties in the United States, and in 2020 increased by 23%, which is a historical growth. This massive growth has a lot of people thinking, what's making these houses go up so much? There are a lot of factors, and we want to cover why, in general, houses increase, and also some opinions on why in this last year in particular we saw so much growth, and give our thoughts on the future of real estate. Why houses go up in value? In its simplest form, it's pretty easy to understand why houses go up in value. It's supply versus demand. When there's less supply than there is demand, prices go up. That means that there are two main factors that are happening that we need to look into. Supply. How many houses are available to buy, and demand. How many people are looking to purchase these houses. In markets where there is a ton of supply, that would cause the area to be in a buyer's market. Due to there being so many houses to pick from, sellers would have to lower their prices to be competitive. Prices would start going down, making it easier for the buyer to get the house with a lower offer. This is why they call this situation a buyer's market, because the buyer is the one who has the negotiation power. The opposite is a seller's market. This is where there is so little supply and a lot of demand. This causes the buyers to be competitive and compete with the other buyers, offering higher numbers, less contingencies, and far faster closing times. Usually what we've seen in the past is the market goes through cycles. Due to some economical issues, interest rates go down. Due to interest rates going down, people can afford more of an expensive house. This causes more investors and people to enter the market, increasing the demand. These new investors would buy homes, causing supply to get smaller. If supply is not replaced at the same rate demand is increasing, then the prices will increase. The price increase makes mortgages more expensive, usually slowing down demand. As demand starts to slow down, along with potentially higher interest rates, less people want to get houses. This causes demand to back down a lot, and the demand and supply start to balance out. The 2008 housing crash. Looking at the 2008 housing crash can be insightful to learn about how supply and demand works. There are a lot of reasons it happened. But the biggest, most obvious one is people were given mortgages who simply couldn't afford it. You had high school teachers getting approved for a $600,000 house. With so many people who couldn't afford their mortgage, once the market was doing worse, people went through foreclosures. So all of a sudden, you had a tremendous amount of houses on the market. Supply went insanely high in such a short time, and demand was just not there. Investors didn't want to buy houses because prices were going down too fast. This kept demand extremely small. Most houses lost 50% of their value within 2 years. This is because with so much supply, people trying to get rid of their houses, they would offer anything to get rid of their house. Holding on to it could mean losing tens, if not hundreds of thousands of dollars. So the price crashed. For around 3 years, a lot of places lost value in real estate. One really interesting thing that happened here is the rent prices. You would think because prices halved in value, so did the rent. But that was not the case. Rent prices are a factor of supply and demand as well. In fact, in some places, rent went up during the crash. This was due to so many previous homeowners entering the renter's market. The demand in the rental market went up a lot very quickly. The supply could barely keep up because so many more renters were adding to the market. Rents maintained, or in some situations actually increased, which is super interesting as I feel that nobody really talks about that. So you now have a basic understanding of supply versus demand and how they work for real estate. What causes supply to go up or down? There are a lot of aspects. In 2008, it was because so many houses went into the market due to foreclosures. But it's been very different since 2010. There have been a lot more laws and regulations to make sure people are only getting houses they can afford. The past 10 years has pretty much been a seller's market in almost all areas. Part of this has to do with the demand going up, but I personally believe it is the supply that's playing more of a factor here. Supply in the last 10 years has consistently gone down, with a huge decrease in the last 5 years. America is short 5.5 million houses. This shows that supply is simply not keeping up for the demand that is needed. There seems to be a higher effect happening in states that have more restrictions and more regulations for houses, such as the West Coast and where big cities are at. California has a housing issue right now, as there just isn't enough supply in the market. In the last year, California had 300,000 people looking for a new house and only made 80,000 new houses. Every year that amount of new houses they build has been less. This is largely due to a lot of zoning regulations limiting where new houses can be built. Due to the long permit wait times and expensive material, it takes a long time to be able to build a house. One way to have a lot of units built fast are apartment complexes, but it's really expensive and a very long process. It also depends on what your zoning laws are in your specific areas. Another factor is the supply of general contractors and flippers in the area. Due to COVID and the prices of lumber going up by 300% on average, this made it really hard for a lot of general contractors to be able to afford to build a new house. Due to this, you had a lot of general contractors leave areas, or simply quit flipping and building houses due to not having work. This means there is a shortage of workers who can even work. This also means that unless there is some major change to regulations, the supply will continue to shorten. This is not only true in California, but in a lot of places. Although California does have some of the highest amounts of regulations when it comes to houses, COVID affected general contractors all over the nation. There is a website called Redfin that can give you a lot of housing market analysis, such as a breakdown of supply the last few years, the average sale price, and many other graphs. If you look up your city, it's very likely there has been a trend of lower supply every year. With demand being relatively consistent, you had a fairly consistent growth in the market the past 5 years. Specifically in the last 2 years, we have had a major increase in equity in houses. This is because of the already short supply, but also a sudden new increase for demand. COVID just happened. People in areas that had high COVID restrictions, spending all day at home, such as work-at-home jobs, were starting to not be happy in a 500 square foot studio apartment that they spend in all day. We also had historically low interest rates. Due to this, a lot of people have been looking for cheaper houses to live in, move out of the big city, and buy a house. If you were to spend all day at home, it's much better to do that in a place where you have 2,000 square foot, several bedroom house than a small studio apartment. And in some cases, the mortgage would be cheaper than the cost of rent in those expensive places, such as New York or California. Last year, we saw a lot of people leave these high-dense population areas and try to buy houses in a bit more rural areas. Places like Boise, Idaho were among the higher appreciating places in the nation due to so many people going to cheaper places. Of course, another big factor were big companies moving out to places, such as businesses in California that moved to Texas. Many large companies moved to Austin, Texas. If you looked at the prices there, you would see an extremely high spike of prices in Austin recently, largely due to big businesses moving there. With businesses coming in, that means you have jobs coming in, which means population growth for the area, meaning higher demand. There was so much demand that supply couldn't keep up, and thus the price went dramatically up. Seasonal growth. Houses do not go consistently in one direction. Usually there is quite a big fluctuation between seasons. For example, normally we see most houses increase in value between March and May, and around the beginning of the fall, we usually see a decrease in demand. We see this decrease in the fall mostly due to so many people's kids starting to go to school. It's hard to move out once your kids have started school. Due to this, demand usually lightens up. Right now it's October. If you look at most markets, you can see a lot of price corrections. People put in their houses thinking that it would still go up, but due to demand going down, they are having to lower their asking price to be more competitive. This especially applies to cold areas where snow becomes a possibility. People don't like to move when it's snowing, so there's a lot less demand. This means you can typically get houses cheaper in the winter, although there is usually a lot less supply. As for the large growth from March through May, that's usually due to the buildup of the people who wanted to move out for winter, but couldn't due to the cold or possibly the kids in school. From March through May alone, in my area the past few years, houses have seen a 10% increase. The future of real estate. Now that you have a pretty good idea on what causes these prices to go up, where will the market go from here? There are a lot of variables, and this is just an opinion and not financial advice, but this is our theory. Supply is not improving. This is almost true everywhere, with some very few exceptions. Due to this, we suspect supply will keep the same trend, and likely keep going down, unless some major regulation changes things. Demand seems to, at the very least, stay consistent. I suspect houses demand will go higher, due to the buildup of people wanting houses who are unable due to the lack of supply. The demand will get so big that even if the supply regulations were corrected, it would take many years to have a balanced economy for houses again. One thing that dictates the demand a lot is interest rates. There is talk about interest rate increasing for houses the next couple of years. This will ease the demand a bit, but in my opinion, nothing major. Right now, interest rates are at a historical low. A few months ago, interest rates were something around 2.8%. That's basically free money. Even if it went up to 4%, people would spend more money each month to get a mortgage, but even then, it's still not that bad. With supply as low as it is, and our opinion of this trend continuing, you would have to see major interest rates increases for this to play much of a factor. Another thing, due to houses' values increasing, rents have also been increasing. Rents in my area have gone up an insane amount the past 2 years. What was a $900 2-bedroom apartment is now $1,200 if you're lucky. If rents keep going up this route, why wouldn't a renter buy a house and have a fixed mortgage over renting? Yes, the mortgage could be more expensive, but if the rent keeps going up, even in just a couple of years, you could be saving money every month. Another thing that is causing demand to go up is all this evolving technology for managing properties. It has never been easier to manage a property from your phone. You can have a video walkthrough, online lease signing, and send emails to contractors to fix things. It is so much easier now than ever to have long-distance rentals. Because of this, people who are in expensive areas have been buying houses out of state. Not only for long-term rentals, but for short-term rentals as well, such as Airbnb. This has massively affected the demand. Then there is inflation. At this point, the government is saying that there is somewhere between 2 to 3% inflation yearly for the past 2 years. But most people are highly doubting that. We are seeing rents go up, gas prices go up, restaurants go up, and the price of cars going up, and many more. Speaking anecdotally, I can tell that when I go to the grocery store today, it's a lot more expensive than what it cost 2 years ago. If it was just 3% more expensive, I should barely be able to tell that it increased, but I can see a large increase. I have heard of a lot of people having the same experience. Due to the higher inflation, people are worried about the dollar, wanting to invest it and beat inflation. One of the biggest factors in inflation is the rent price. Not only that, but people are always going to need houses. If in some situation there is hyperinflation, houses would still be worth something. And if you can get a house with a loan, if there was inflation, that would work into your favor as you would have way more equity in the house and possibly even higher wages. It's these reasons and more that in our opinion, houses are going to be increasing pretty rapidly in price in the next few years. Unless something major happens that would increase supply or massively decrease demand, but I don't see those as being too likely to happen. That's the video, guys. We hope you enjoyed it. Comment below what you think is going to happen to the housing market the next few years.